Welcome to Policy on Demand. I'm Sindhu Blume. I'm pleased to be joined today by John O'Loughlin to talk about the trade outlook for Europe, and that includes the world's most integrated region, which is the European Union. John, thanks so much for joining me.
Great to be here. Thank you.
And I want to point out for our audience that we are at PwC's Customs and International Trade Conference in Dallas, where we are talking about all these things. So, John, let me start with getting a sense of the overall trade environment, the trade policy environment in Europe, considering everything else that's going on in the world.
Yeah, it's probably fair to say the European Union, as a trading bloc of 27 member states, would have a policy that it would regard itself as being an open and fair world trade policy. And that's kind of reflected in what we've seen in recent years. The European Union is always open to trade deals, trade negotiations, free trade agreements. We saw that probably out of necessity with the UK, and more recently with the Mercosur agreement with South American countries, and in recent times, likes of Japan, Korea, and New Zealand. So it's always been open to trading externally with third countries. And I think that openness, I suppose, has served Europe well in terms of the ability to buy goods, but also then in terms of selling European products on external markets.
And what is the role of China or that relationship?
China is interesting. And if you look at China, even from a numbers perspective, outside of the US, it's the next big trading partner. How does that break down in terms of exports? It's our third biggest export market. It's our largest import market. That creates a trade deficit. But looking over recent years, that trade deficit has been reducing. So we're becoming less reliant on China year on year, with last year reducing by 18%. So it's interesting just to see how that has developed. Two kind of interesting points to note around China. One is we saw protectionist measures put in place around EVs, electric vehicles, and also then in the context of e-commerce products. What the European Union is looking to do is to close that gap between European retailers and perceived dominance by Chinese retailers selling on the European market at below market prices. So we're seeing a change in the policy, and there's more to come, I think, with respect to Chinese relations over the next while.
There's, I think I'm stating the obvious here. There's a tremendous amount of uncertainty, especially right now. So from a European company perspective, are they looking closer to home when they think about their trade strategy?
Not necessarily. I think Europe is an open economy. You've 27 member states, as I mentioned. Free movement of goods, free movement of capital, free movement of labor. And I think those fundamental principles that underpin the European Union makes it easy to do business. But we operate in a very globalized world. So we're always looking to the external and outside world to trade and also to purchase goods where we don't have that capacity in the European Union. So I think we're open. I can't see that changing for being what's been described as a Europe for Europe strategy. I don't think Europe is going to evolve like that. I think it's a very open economy. We're inhibited in some ways by over-regulation. That's an inhibitor for us to do business. But I think that continued openness, I think, will continue to be a policy by the European Union for time to come.
So we are in a very retaliatory environment as well. So what does that do for European companies and I know that this is thinking into the future a little bit, but what does that do in terms of working with the US or having a trade relationship with the US?
No matter what happens with regard to the trade relationship between the US and the EU, it will continue. Both parties will continue to rely on each other in terms of having key strategic relationships, not only on trade, but on other matters like defense and other areas. So will the tariffs result in a change? Yes, the relationship will change. But I think what the European Union will do, depending on the outcome of the Trump tariffs, they will retaliate. We saw that in Trump 1.0. We're seeing it now. The European Union has published measures. It's published a large list of goods by which it intends to impose tariffs should the US, as expected, put in tariffs in early April. So we will see that kind of those measures come into place, which will ultimately end in negotiations. But the outcome of those negotiations kind of remain to be seen.
Right. So let me ask you about how companies this is more at a granular level, but how are companies planning? How far out are they able to plan? And what is kind of the outlook months on months down from now?
Planning is ongoing. Companies are struggling with the planning. Access to data is proven quite difficult. When you have the data, how do you analyze it? What sense can you make of that data? What information is it telling you? From there, you're getting into looking at the impact, and from there, looking at strategies. The one thing we are seeing on the ground in Europe is nobody making any big decisions at this moment in time. Everybody is in reflective mode. Everybody is thinking about what to do. When to do it really will be determined over the coming weeks. And I think it's fair to say that in terms of those mitigation strategies, what companies might do, this needs to be end-to-end. You don't look at this in terms of a tariff isolation. This has a tax implication, a finance implication, a regulatory implication. Everything within an organization needs to factor into any change that will come. And companies need to make no-regret decisions, and whether they make those in a short, medium, or long term, again, remains to be seen. It's probably industry-specific or even company-specific in terms of how they will react to that.
So I'm just curious, from your perspective, so you're talking to companies all the time. So is there something you think that should be happening or in terms of next steps that is not happening?
I think within an organization, I think having that team that's cohesive in their thinking, I think is the first step. We do talk to companies where different parts of the organization have very, very different views in terms of the impact. They have very different views on the solutions. I think having a cohesive view is really, really important. From there, it's a lot easier to consider the impact and furthermore the decisions that need to be taken to mitigate. But actually, you'd be surprised that front-end bit of having a company-wide view is not always in place. And I think that's actually an inhibitor to making plans into the future.
Well, what's preventing companies from doing that?
Like any organization, communication.
Okay.
And communication and understanding. We read the newspaper, we follow events, we follow the commentary, we follow the politicians, but we interpret that in very, very different ways. So having that cohesive view helps, but it's, as I mentioned, it's not always in place. But I think communication internally is often a good starting point.
John, this has been great. Thank you so much.
Thank you for having me.